Well, hello there, traders. Welcome to TOGS Trading Podcast. This week we're up to TOGS 19 of flying through the year. Hopefully you're feeling that same way as well. Today we're going to be talking about trading time frames, okay? Which is the best one to use, all right? So we might have quite a difference in opinion between myself and, as always, my pal Big Ian there in Dublin. Looking good, Billy Ray. How are you
Thank you
doing?
very much. Oh, grand. Got the haircut this morning and everything because I have to go to Germany tomorrow to a funeral. So
Yes, yeah.
I have a busy,
Well,
busy day ahead of me packing and getting ready,
you're
unfortunately.
looking smart though. You're looking smart though. Yeah, my
Thank you very
condolences
much.
for your
Yeah,
family's loss, etc. and stuff. So,
thank you very much.
but a couple of days away in Germany. So, will you actually try to do any trading whilst you're traveling, or will you
Not a hope. I'm
keep
not even bringing a
trading?
laptop with me because I'm going flying over to Berlin tomorrow night. I'm leaving. Actually, I might try a little bit in the morning, but it'd probably be just too busy. I can't see it really happening. Um, And then I'm flying to Berlin tomorrow night, and then I'm going to a town the next day called Jena, which is 4 hours from Berlin, three and a
Right,
half
right.
hours. hours.
Okay.
So it's down Leipzig would be the next nearest city, and then there's
Right. Okay. Right. Take
two
it there.
days, 2 days of family funeral and day back. So that's basically be back coming back on Monday.
Okay.
So back to
All
work on
right.
Tuesday. But no, you couldn't trade like that. You wouldn't even
Good.
have no, you wouldn't even
Good.
have
I'm
reliable.
pleased to hear it.
Mm.
Yeah, I'm pleased to hear it and stuff, Ravi. That's a conversation about psychological stop losses and focus, etc. Maybe that'll be a topic for a future session. But today we're here to talk about, well, just to kick off, talk about trading time frames. So, what are your own thoughts on trading time frames, Ian? What's been your own experience in your own journey?
First of all, there's no perfect trading time frame. They're all basically, I always think of them as a bunch of screwdrivers. You're just picking the right size screwdriver to do the job that you want to do. Um, I think what ends up happening for a lot of people is that they don't look at their lifestyle enough sometimes, and they end up picking time frames that are not conducive to the life that they live. Um, I think the thing I
Okay.
probably say most about time frames if I'm talking to people is that you're really like particularly day trading is trading the needs of a higher time frame through the medium of a lower time frame, and that's something I find that a lot of newer traders don't tend to understand. So they get
Yep.
caught up on trigger charts and things like that. So I suppose the best thing I could do is just quickly go through my own process for that. So I would start out every day or at least every week on the monthly chart on the highest possible time frame over the longest period of time, because then you can see in general is what price is doing. Moving then down to the weekly and then down to the daily, I would tend to use an almost naked daily chart. On my daily chart at the moment, there is one line, which is the previous high, the 5333.50, because I don't need any more information. I can see it with the naked eye. So that gives you a broad idea what's going to happen. Then you have to move down to the next one. The next one I would move down to usually is the 60 minute. And the 60 minute gets all of the technical analysis basically done at all the traditional technical analysis, the fibs, all that kind of stuff gets all the lines are drawn in. I'm looking for some pattern flags, head and shoulders in 60 minutes can be quite a nice little pattern, that kind of stuff. And then you're moving down to depending on the action on the day, at the time of day, and sometimes the volume, and sometimes my mood and what I'm trading, I'd either use to the 5 minute to enter a trade, particularly if I'm a little bit anxious,
Mhm.
or then down to the 699 tick chart, and that would be my entry chart, and I would use that chart then for the first part of the trade to until it gets to break even, which is only a few points up. So as soon as I get into the trade and it moves up and it goes to break even, then I'm not that then I've moved to a higher time frame. And I think one of the things when you're using those time frames is you see an awful lot of traders use time frames that are too close together, like they use a 15 and a 60 minute, which is essentially going to tell you the same thing. And a lot of the time they're doing that just to try and control their own emotions. and control their loss. Like they're looking for something they're in a trade that's not going well for them, so they start going down the timeframes or up the timeframes to look for some bias that they can use to stay in the trade.
Yeah.
They're making a lot of mistakes. So a daily will tell you a big general picture. A 60-minute will zoom in and tell you a more important part of the more detailed. And then the 5-minute or lower timeframes, they're just trigger charts, really. They're just there to help you manage your way into a trade and to help you in the opening minutes of your trade, basically. And what happens a lot of traders, and I see this all the time with them, is they get obsessed with the trigger chart. They're being all in there watching every tick. And the problem is that trigger charts, because they're not that quick time frames are only reflections of the higher time frame. So the higher time frame really is going to do what it's going to do. So you can have contra trend. You can have a contra trend move, quite significant move backward in a 60 on a 5-minute chart in a 60-minute bar. So there's and that causes emotions a lot of the time in traders, and then they end up getting caught out with, oh no, there was a big red bar. I exited my trade on a 1 minute, and they're not watching the big thing. And I think one of the big skills of professional trading is memorizing the charts easily, the ones that you've looked at before. So I have a good idea what's happening on the levels on a daily chart. I have a good idea in the back of my head that what the levels are on a 60-minute chart, and then I'm looking at those levels on a 5-minute chart. They mightn't necessarily even be marked in there just because I remember them, I think.
That's a good point. There's a lot of good there and stuff, so we'll come back to that. Kind of a couple of things that I picked up on. The first one was here's an interesting question for you, which is linked to the time frame, but also a broader subject. Is you mentioned there that if you're feeling a little bit anxious, about whether you're using the 5 minutes for the entry or the 699 tick, I think it was you said, and stuff. So then the question becomes, well, what's making you anxious, and how is that manifesting itself? This is just my curiosity asking you, just picking up on that comment that you made.
So what makes me anxious? Well, I'd say there's two different things. First of all, is what makes me anxious and what makes other people anxious. So what ends up happening with a lot of other people is they see a big red bar or they see a big green bar that's going against their trade. And what they forget, what I end up having to tell them, is that it's not the bar, it's not the speed with which price gets from one place to another, it's whether price breaks something or holds something that's actually important.
Yeah.
So there's no sense in feeling a certain amount of fear just because it comes down to because it's just moving so fast. What makes me anxious would be doing contra trend trades sometimes, because the thing is, yeah, because there's, like yesterday, for instance, there was I would put out 3 setups in the ES. One of them, and only one of them really yielded very much, which was a 10 points or something. But one of those was a contra trend trade, and the thing is that in all uptrends you're going to get the move back, but they don't have to be as technical, and there's not as many people involved in them, and they can be a little bit iffy. So that makes me anxious. Sometimes if I'm doing, because I know the difference between, like, I would have A-class trades and I have B-class trades, basically ones that are not quite as good. The setup is not quite as good. So there'll be much more continuation stuff. I didn't get into the beginning of the move, so I have to get in on a continuation pattern or something like that later on. That can make me a little bit anxious. General gut feeling, like I quite trust my own gut. Yep. When I'm trading, because I'm at it a long time. So sometimes I trust that my subconscious can sometimes see things and analyze things that I can't consciously see or analyze. So I find it from that point of view, that's what would make me anxious. I mean, if I'm doing with a trade, one of my good A-class setups with the trend, you don't really feel anything. You're just going in and you're pressing the button because you've known that it's going to happen for the last hour.
Yeah.
Just sitting around waiting for it to happen. And then it comes to it, and then it gives you a trigger, and then you press the button, and you know that it's a really high RR. You know that it has it works maybe 80% of the time, depending on what exact setup it is. And you just press the button, what are you risking? It's a stop. You can't be getting too anxious about stops on your best setups. And then some days you're just off, Also, as well, I have a three stop rule. So if I have two stops down, I'm going to be a little bit anxious on the third one, no matter what it is, because that could be my day done.
Pitch. Yep.
Yeah, so there's not really a lot, and that's what the types of things that would make me anxious. I think, and that's
It's just I picked up on that. I was just kind of curious down what because everyone will have their own definition of what would make them anxious. Everyone would have a different take on it and stuff based upon who they are and the way they trade and their experience, etc. and such. So I was just interested to that. And there's a couple of other points, but we'll come back to in a moment. But I thought personally, sort of talking about trading timeframes. You are right. In your first comment that basically it is about finding the kind of time frame that suits you best, and there's actually, I think there's a couple of things that will come into that. There is your own, let's say, your own personality, but then equally there is also the your trading lifestyle, your schedule, etc. I find lots of people want to trade the kind of the intraday timeframes, but they are just not really ready or prepared to do it at a successful level. And so actually, they basically they get bored of trading monthly, weekly, daily charts and start trying to trade 5 minute and 1 minute charts, and invariably they don't have an edge, they don't have a plan, they don't have any sort of experience of operating in environments where things happening are so fast and everything's so dynamic, and invariably that all comes back to basically to hurt them. So I suppose I'm in an element of a unique situation that I am very happy to operate at all levels in the timeframes. I have some of my longer term positions are done from kind of the monthly chart, executed in the daily, but then equally some of my intraday trades, I might be identified on the 30 minutes, but actually actioned and executed on the 1 minute chart and stuff. So I have a bit of experience of operating across all of the levels, depending upon the kind of style of trading that I'm engaged with. What I will say is that so of course my background prior to trading was a very big as a fighter controller in the Air Force. So my job was basically sitting in front of 6 screens looking at sort of the sweeps on a scope and stuff. And actually, weirdly, when I first started trading, I my mentor sort of basically got me to trade the 1 minute charts. And actually, I wasn't very good at it, which I was surprised at. And when I started to look into, what was my trading style, I was too aggressive getting into trades, too aggressive getting out. I was just far too aggressive. And actually, what I realised when I did a bit of kind of in-depth review of it, was actually the 1 minute charts were too slow for my brain at that time, and the reason was that when I sat in front of radar screens, the radar would update every 10 seconds. So you basically get 6 sweeps a minute. So every 10 seconds, you are having to make a decision. Turn left, turn right, climb, descend, fire, engage, interrogate, etc. And so you get used to operating at that kind of pace, right? And so actually a 1 minute chart, having to wait for the 1 minute candle to complete, when I was operating at that level, it was just too slow. It was actually weirdly too slow for me. And so I kind of pulled well away from that and went up the time frames. Whereas I was actually able to just operate quite happily and effectively, just basically see the trade, take the trade, manage the trade, exit the trade, debrief the trade, repeat the trade, and find like a what's the right word? Kind of like a battle rhythm, a cadence at which you could just quite happily operate. And then actually, as I became comfortable as a trader, then I came back down the time frames again, because I had the experience of just being able to read markets, to talk about markets, to engage markets. I had the self-trust to basically know that I would do the right thing, regardless of what was going on in the market. You mentioned earlier about anxiety and new traders just basically chasing the big bars And there's that none of that bothers me or interests me and stuff and whatever. I'd built the self trust to know what I was doing and be able to, almost like a metronome, just tick tock, trade on, trade off, trade on, trade off, and operate that way. But I do appreciate, I'd had a lot of professional training beforehand, and I'd traded for a good few years. Not everybody who comes to trading has had that kind of background or experience, and hence they get themselves in all sorts of a trouble, don't they?
Yeah, they do. One of the things I was just sitting there when I was thinking about it, because nearly every newer trader I've ever met comes in with the idea of, oh, I want to do a little bit of swing trading and I want to do a little bit of day trading when I'm waiting for the swing trades to work out. And the problem I always find with that is that they can't do either, and they're not concentrating on either, and that always kills them, because if you only have to beat the market in one little place, one small little thing, it's one setup. I mean, you can sit in there and you can learn how to trade double bottoms or double tops on a 60-minute chart. What kills most people, or even the system I'm using at the moment, because we're in a cusp area, so I have to use this quite archaic fib system, which works wonderfully. But the problem I find with it is that it only throws out very few trades, so it's a little bit difficult. And it's not that it throws out the trades, because it's not that I get bored waiting for trades, because the thing is how can you get bored of winning? That's what it is at the end of the day, because if you're waiting for it's like getting burned out. You can't get burned out at trading if you're winning all the time, which I'm not, because nobody is, but you're always winning. But you can't get, I don't know how people can get bored. You see, it's the same thing with newer traders. You see them complaining about, I used to teach them this old same fib system that I have to use at the moment because of where the market is. And they all failed at it. And they all failed at it for the simple reason they couldn't sit and do nothing.
Yeah.
Here is the answer. But the answer means that you have to sit in one place for 8 hours a day. Yeah. And that is a really difficult thing for a lot of people to do. The lower time frame charts, the lower time frame charts they're just emotion, a lot of the time for a lot of people, because they're generating, because you have to make that sort of like relatively, well, I wouldn't say it's aggressive, because it's a planned setup, and the planned setup is not something that's actually aggressive. It's something that you're actually doing, but there's a huge amounts of emotion. This huge amount of motion can be generated by very quick charts, and that causes huge amounts of problems. I mean, I find for most newer traders, at least, quick charts are just a way of screwing themselves up faster. In fact, I think sometimes for some people it's a bit of a blessing, because it gets them out of the game quicker, and just causes them less pain, than sitting on a daily chart. I also don't think as well that you can move. I don't think you can move to a lower time frame chart unless you can actually trade a higher time frame chart, because a lot of the setups and a lot of the processes are the same on a higher time frame as they are on a lower time frame. Like a head and shoulders on a 60-minute was actually better, I think, than on the daily. It's statistically way better than it is on a daily. But it's the same thing. You're trading it in the same way. Bear flags, trading it in the same way. Bull flags, trading them in the same way as if you're trading fib pullbacks, fib retracements. You're trading in them in the same way, whether you're trading a daily chart or you're trading a 5-minute chart. It's the same thing. Basically, it's just quicker. It's just a lot quicker. So I think 100%. Yeah. So I think a lot of people go in, they start to feel too much emotion. You move when they move down, because on a higher time frame, you might have 10 minutes, 2 days to make a decision. But on a 5-minute chart, you've only got probably, well, actually on a 5-minute chart, you really only got 30 seconds, in my own opinion, because 5-minute charts, that's 4.5 minutes of a 5-minute chart is noise.
Yeah.
A lot of the time, unless it's actually really moving up, but it's the last 30 seconds that really dictate, because it's where the 5-minute chart is going to close. So I spend a lot of time. One of the things I will do in a trade, if I'm not happy with it, is give it to the end and see how the 5-minute bar closes out, because it will dictate. The previous 5-minute bar can often dictate what the next bar is, unless you're in an area of support or resistance. So if you have a big green bar and you're no resistance for a while, you're probably going to have a big green bar the next time. And those bars will get progressively smaller until they get to the eventual destination. So, you know, you can watch that. You can watch them and trade them from that point of view, I think.
Yeah. And there is a good deal of that of people come to trading and think the shorter term frame intraday trading is the fastest way to make money, but actually for most of them it's the fastest way for them to lose money, right? As I said earlier, because they're not used to operating at that kind of level of intensity. I kind of try and use examples for people of you won't see this in Ireland, but I'm sure you'll have seen it. But when you get like a kind of military fast jet guys flying low level, 250 feet, 450 knots, 480 knots, they don't do that on day one of like pilot training. It takes years to be able to work down to being able to be comfortably able to operate successfully at that level of intensity, because when things go wrong very quickly and your margins for error are reduced significantly. Next thing you know, you spread yourself all over the Welsh mountainside like strawberry jam. Or even an alternative version is, people watching, Formula One racing. Okay, ostensibly you could say it's the same thing that you drive. All right, okay, it's out of your off your driveway. It's got four wheels, an engine, a couple of pedals, steering wheel. All right, okay, and ostensibly it's the same thing. However, everything is operating at a significantly higher level of intensity than you driving your Ford Mondeo down to Tesco's, etc. Okay, you take you and stick you in a Formula One car, you're probably in the bushes at the first bend, etc. Because you've not really been either trained or comfortable to operate at that level of intensity where when things go wrong, they go wrong very, very fast. And so you're absolutely true, is that if you can't trade well on the higher time frames, the likelihood is you're probably not going to be able to trade very well on the lower time frames. Having said that, what I do think is that sometimes, you can use that to help you get some skill and experience. And when I started, there were no such things like mini lots or micro lots in FX. You were in full standard contract right in, balls deep from the word go. With micro lots, you can now, if let's say you have a daily chart setup, okay, if that setup probably shows up on the sort of 1 minute, 5 minute, 50-minute chart, well, do you know what? You could probably trade it. You could try trading it, because you're just going to get more frequency of trades. And so you get your cognitive recognition abilities to identify that trade setup much, much faster. The likelihood is it's probably still going to be more effective on a higher time frame, but you can use it as a training tool to get you up to speed, right? But for most new traders, that's kind of, that's where I'd limit it. I see lots of people on social media, they're all trading 1 minute charts and stuff and what have you. They're all claiming to be great, and now they're even claiming that they want to trade 5 seconds charts and stuff and what have you. And I can't help but think most of it is just nonsense for most of those people. You might get one or two people who can do it, but the vast majority, it's just like giving them a loaded gun to play with. At some point they're going to blow the brains out and stuff. Just because they're dicking around and what have you. So. It sounds like we're doing down on you trading intraday trading. I'm not. Okay, I can do it and stuff, and I'm very happy at it. What I'm saying is that if you are completely new to trading, all right, you need to learn. You need to have processes and routines to be able to operate effectively first and foremost before you find your, let's say, your level, your time frame, your pace at which you can comfortably operate. And for most people, it is not the 1 minute charts as much as they might like to tell themselves.
No, I find for a lot of people, what they're trying to do is achieve something quicker, and that's what they're trying to do. And then, because most people go into trading with some sort of outcome that they want from trading, which is a different type of lifestyle, whatever it is, and then they see that the only way they can take their $1,000, $2,000, €1,000, whatever it is to try and day trade it. And then for most people, the idea of sitting around for 6 hours to work for 5 minutes is really quite daunting. It's a hard thing to do, because you still have to be kind of there, and you still have to be kind of present. But you're only waiting for that thing, waiting for that one setup on lower time frame charts as well, because you have more trades. You have more, because I'm a scalper, so that's what I do, is lower time frame charts. You can find some guys there's a pressure to trade because they miss, because the more trades they are, the more trades you're going to miss. You're going to hesitate. Maybe even I still do it sometimes. Sit down and hesitate. You're not completely sure. It's not a perfect setup, and then it flies up, and then you've missed 10 points or whatever it is. And then you start building up pressure to trade, because now you feel, oh, I missed that one, I have to get the next one. And then you start forcing the next one, and it can cause a problem. And I remember as well, when I started off first, there was only the E-mini contract, the full 50 for 4 ticks, and that was expensive. When you didn't know what you were doing exactly. 2 points is $100 on one contract. So instead of losing what you lose now, which is effectively $11 with fees, you were losing quite a nice little lump. I think it's a different world now with these mini contracts, with the micro contracts.
Totally. There's, I think they're fantastic as a way and a means to basically get you some exposure, and also be able to train and trade yourself in a live market. Okay, demo's fine for starting off and getting you happy and comfortable with the platform and making sure you can follow that. But at some point, you need to get in the market. You can read as many books as you want. You can't learn to swim from a book. At some point, you have to jump in the pool and get on with it and stuff. And it's the same with trading. Just to answer one of your points earlier there about, having to sit there for 6 hours for what might actually just be 5 minutes of action, that can be tough. Like, that can be very tough. And for a lot of people, that boredom threshold gets met very quickly, and that's when they start to either distract themselves, scrolling nonsense, or basically just taking sloppy trades because actually because they're bored of it. Which is why I say, well, actually, stuff like the 4-hourly chart, the daily chart, can be actually very, very useful. So let's say, take the daily chart, for example. If you're operating, well, you might either be in an FX world, charts that kind of end at the end of the New York session, which can be sort of let's say 10 o'clock European time, or even just first thing in the morning. You just go in, you do your analysis, you put your trade on, switch off your laptop or computer or device, and leave it and play out, which means you are actually putting your trade on, but you're not having to spend that 6 hours sat there waiting for it. Okay, which is what people forget when it's kind of like intraday trading. Okay, you might be sat there for hours. And it happens. What still happens to me? I tend to sort of give myself a couple of hours. Kind of 8 till 10 in the morning. And you just know that either bang, the move may have started at 6 in the morning, or bang, the market, it moves at 11 o'clock after you've, kind of moved away from the desk. That's what happens. All right. That's what happens and stuff. That's just the nature of the gig. It's more about recognizing, you can't sit there all day. Well, you can, but your ability to perform just degrades rapidly. This is a performance activity. You're going to get 45 minutes of really good performance. Maybe push it out to 90 minutes, 2 hours, but after that, you're kind of done without a break. If you're not taking a break, you're kind of done. You're going to struggle and stuff. And but of course, people don't want that, as you alluded to earlier. They have external drivers. Okay, they're looking for a financial reward as quick as possible, and so they think that if they just basically open a chart and put on the 1 minute chart and hammer away, that's going to achieve those external drivers quicker than before. But actually, all you're doing is providing liquidity to professional traders who have the patience and the knowledge and the skill set to basically slice you and dice you.
When I started off, I thought I was going to make a fortune out of channel breaks. That didn't happen. Basically. I remember I spent a summer in Berlin once, just went over for the summer.
Oh yeah.
And I spent the whole summer just watching channel breaks, basically, and setting up, trying to get a set up together for channel breaks. One of the things I find is when people follow, what people tend to do sometimes is that they'll follow somebody on YouTube, or they'll follow some other trader, and they'll try and adopt all their strategies, try and mimic everything that they're doing. which means a couple of things. One is that they're moving to a time frame that's too fast for them, too fast. So if you go on and you watch, I mean, there are some really good traders on YouTube and stuff like that that are showing live trades, but they're professional traders, and the fact that they're using 5 minute, 1 minute, 3 minutes, whatever quick time frame, there's two things that happen. One is they don't show the whole process of how they came to the trades most of the time. They're just showing this trigger chart. So you get people trying to emulate sort of greatness without doing the background work, basically, and they end up on a time frame that's too fast for them. So that's one thing. Indicators is another big, huge thing with time frames, I think, because indicators are lagging. So a lot of, I use a standard setting STO. I don't 1433, nothing really much else. On a 699 chart, because it's so quick, it's actually relatively, it's a handy thing. Because if the STO is in congruence with what you want to do, like basically if it's oversold and overbought, it helps you in the trade. So sometimes when you're picking a time frame, you have to look at what indicators that you want to use to see how they actually react. Because, like, I'm not a big fan of using, obviously wouldn't be a big fan of using like 7 indicators, because a lot of the times when you see people's, somebody sends me a chart and there's like 7 indicators on it, and 4 of those indicators are telling you the same thing.
Yeah, totally.
And because they're taking their information from 1 or 2 sources. You don't have a price, like something that might tell you about volume or stochastic. That you want to have, you're going to use multiple indicators. You want to have an indicator that tells you each one would have to come from a different source, I think.
Yeah, that kind of reminds me, that strays us into next week's session. All right, next week's TOGS podcast, which is all about indicators. Are they actually any use whatsoever? So we're kind of straying into that a bit, but I agree with you in that there are certain indicators and certain settings that work better on certain timeframes. So if you are determined to use indicators, it's best to know kind of what environment they operate in effectively, because they may not all do that. And we also have to remember is that, a lot of those indicators that we take as read, so RSI, MACD, etc., they were developed in a time and a place when actually computers were just coming to the party. There was lots of traders who still effectively either drew by hand, or they were literally the computer was just drawing a daily chart. They weren't looking at anything lower than that and stuff. And so we do have to remember that. But you are right. If you do have to take into account, if you're going to use indicators, what does the kind of time frame suit itself? I suppose it leads into another element, a question around timeframes, as in, do you just use one time frame, or do you use a mixture of timeframes? Okay, that's a question for us to consider, because you alluded to earlier that sometimes they'll execute on, let's say, a trigger time frame, but then they're either, whether it be lack of confidence, lack of self-belief, they're nervous, anxious, they will start looking up and down the time frames in order to just to get a little bit of confirmation bias that basically what they did, it was the right move. And that's not an effective way of using trading timeframes either. All right, I have absolutely no issue, and I do a good part of it myself and stuff, in terms of having almost like an analysis time frame and an execution time frame. I have no issue with that at all. I use that in quite a lot of my own trading. All right, but even that, you have to know what you're doing. All right, so one of my setups, I look for the signal on the monthly chart, and then I execute on the daily chart. Okay, and that's great, and that works nicely. I see people trying to look at like kind of the weekly chart, and then they're trying to trade it on the 5-minute chart, and the time gap is too big. All right, it's too big and stuff. It's just basically the connection between the weekly chart and the 5-minute chart is tenuous at best and stuff. So personally, my kind of cadence, my battle rhythm comes from basically my general is like weekly 4-hour 30-minute charts. Okay, and I can go down to 5 more minutes should I need to, but those kind of work I can work quite nicely. I can work quite nicely with them, quite happily, and just basically, throw my boat, so to speak. So yeah. So you mentioned it yourself earlier. In terms of the kind of timeframes that you have. So you will effectively also use higher timeframes and then execution timeframes as well, won't you?
Yeah, like sort of definitely, because I mean, if you look at a daily chart, right, and the daily chart is in a big flag, it's got 3 or 4 things that it can possibly do. So if we say we're in a big bull flag, like we're kind of in a little bit of a consolidation at the moment in the market. So if you have a bull flag, for instance, you have a top trend line, you have a bottom trend line, which basically means that even if you're trading daily, sorry, if you're intraday trading, is that trend line, the top and bottom trend lines are important. You know that we say the top trend line, but if you're expecting it's a bull flag, you're expecting it to move out, it gives you a hint of what type of action that you're going to see, because to break a trend line, there has to be a certain amount of energy, and it has to stay above the trend line. Or else, because if it comes back under the trend line significantly, now it can chop in and back and over, not these little small moves that I'm talking about, is a more significant move back under the trend line. It proves that the longs are not in control, and then you're into shorts, basically. So those things are all things that you need to know, that those things are there in the day, on the daily chart, so that when you're intraday trading, because you can trade a 1 minute chart all you want in isolation, but there's going to be a big wall like that trend line. And if you were trading into that trend line and you're not aware that it's there on a daily chart, you will get killed eventually. You get away with it once, you get away with it twice, but one day they're going to get you. One of the other things I found which we're just saying there, also back in the day, it was very expensive to get in and out of stock, and so it meant that there was less movement. I remember going to good buddies here at one stage and asking them for quotes, and they were quoting me 1% in, 1% out. That's 2% of your position just for transaction fees, which seemed quite expensive, considering I could do the same thing at the time with an American stockbroker for $1.
Yep.
Setups, people, just because we were mentioning setups, because a lot of newer traders have this big image that a setup is this big, technically amazing thing. A setup is as simple as, if you're in an uptrend and you have a double bottom, a 60-minute double bottom in a daily uptrend, that's a setup, or at least the start of a setup. So they're not all that sort of like magical thing that you sit there for, when the sun is in the right position and your left nostril is itchy or something. They're quite simple. It can be quite simple things like trading a fib retracement around a daily trend line in a bull flag, because you know that it has to go up over the bull flag, and so on and so forth. So yeah, sorry, the last thing I wanted to say about that, I knew there was a thing I wanted to do, is that not everything is suitable for intraday trading. So the larger stocks like Apple and stuff like that, they're fine. To a point, because they basically mimic the market. But a lot of stock, the volume is not there. So what ends up happening is that they become very dirty, because, like, even this morning when I was looking at the ES, when I was doing my notes for this afternoon, the 1 minute average volume was 136 contracts, which is basically one trader pressing a button can actually move a 1 minute bar one way or the other. He just has to dump us 136 contracts and he owns that 1 minute bar, which is a tiny amount of volume. So you find a lot of the time that on lower timeframes in some stocks, that they don't tend to be all that technical, because the money is because where's the money made? In the ES and crude oil, for instance, and stuff like that. There's a lot of money to be made that goes into the intraday trades. So it's in their benefit. It's their benefit to keep it somehow technical and to keep it running in some way that's kind of regular, that people can make money in it. Because if you kick too many decent traders out, you'll never get them in. Again, they'll go on to do something else, because Like not amateur traders. Nobody, you know, if you're an amateur trader, you're until you learn, you're basically going to pay a cost. But if you're like me, for instance, like if I went into the ES and I could not make any money in the ES, I would go and trade something else. So it's in their benefit to keep it some way to get my volume in, and they need my volume as much as they need their own, you know, to a certain extent. Because if you buy, if you buy Apple tomorrow, the next thing you want is for other people to buy Apple, or else nobody makes any money. So they have to leave the gate open in some way for experienced traders, because experienced traders control most of the volume. It isn't amateur traders. And the thing is, like, people are wondering then, where does the money come from? No, I worked in the fund industry back in the last century, and they were woefully inefficient. You know, there were these huge funds with $50 billion in the funds, which was, you know, like a national debt of Ireland at the time. And they were woefully inefficient in how they were operated. And that's where a lot of the money is coming from. And if you talk to brokers, you find, you know, you talk, how do they fulfill orders? They're only buying at the bloody VWAP, you know, and selling at the VWAP. They're not looking for every single penny. So there is a lot of inefficiency that is exploited by intraday traders. But on some things, when the volume is too small, and where most of the money is going to be made on the swing, they will keep the daily chart is kept lovely and technical. The intraday is a sloppy mess, basically.
Yep, I wouldn't disagree with you. I wouldn't disagree at all.
Yeah, can I just say one last thing? Just before a stock tends to move, you start to see it pick up and be more technical in its intraday charts. That's
interesting, isn't it?
Yeah, because somebody's coming in with money.
Yeah. Someone's doing the business. That's interesting, that and stuff. So I suppose kind of like drawing to kind of draw towards the end of our series is that when it comes to trading timeframes, there is a good deal about finding the right one for you. Okay, just because every Tom, Dick, and Knobhead is basically trying to trade 1 minute charts on your YouTube doesn't mean that is the best way for you. Okay, there is kind of you're looking at basically at a Goldilocks. All right, okay, you know, some like the 1 minute chart might be just a bit too hot. Maybe the monthly chart is a bit too cold, right? And it's about finding a level, I said, that you can find your own pace in. Okay, things are not happening too fast, but they're also not happening too slow, and you're in a position to basically execute your plan comfortably. Okay, without that kind of fear and anxiety, and that will be very different for everybody else. Okay, but it is perfectly also possible to basically have a higher time frame to do your analysis on, but also execute on a lower time frame. As a general rule, I normally say you should have at least it should be like a kind of a rule of 4, all right? In terms of it should be your the kind of the distance in terms of time between your higher time frame and your lower time frame should be, as a general rule, about 4 to 1, okay? And it could be more, but anything less than that, it generally is kind of, it's a little bit too close, all right, as Ian was talking about himself, all right. So, you know, the weekly chart and the daily chart, okay, there's you're effectively looking at like a 1 to 5 there, you know, monthly to weekly is about 1 to 4, okay, and above, all right. But trading like 15 minute and 30 minutes, well, that's, you know, you're only got a 2 to 1, all right. There's a little bit too close for comfort. There's not as much value in doing that. What would you say, Ian? You know, there's a few final points for people regarding trading timeframes. What would be your kind of takeaways?
Well, the thing I was thinking there was, you kind of have to surrender to success in trading, you know, to a certain extent, because one of the things that you have with trading is that a lot of it is simply, no matter what time frame you're doing, a lot of it is just waiting around.
Yeah.
Can you imagine failing at your life's job and your life's dream because you can't sit still for 2 hours? I mean, that's what it basically boils down to a lot of the time. And the thing is that I think there's a point where you have to go, just give up and surrender to doing nothing when it's the right thing to do nothing. And that's doing things is often much worse than doing nothing in trading. So just surrender to it. You know, that's a big
surrender to doing nothing. There you go. I mean, that's quite a
it's just such a thing. And it's really because for the last few weeks I really saw it with my own, because I had to change systems, because I can't trade cusps. I can't trade these new highs basically, and coming is just a mess for my system. And so I have to use a system that just throws out much less trades, but much better trades, like really good trades, but occasionally throws them out. And I find that that's a it's a thing that I sort of almost have to learn again to do, is surrender to nothing, because I have to sit and wait.
Yeah.
And it's and also the last thing I'd say is that whatever you're doing, it kind of has to sing to you. Like swing scalping and fast charts sung to me when I went into trading first. Like that was what I was really excited about. It's my personality as well, to a certain extent. I drive fast. I used to go shooting when I was a young fella. I'd bring 2 boxes of cartridges. My cousin would bring 4, and he'd come home with 1, and I'd come home with 1, because I would fire at everything I'd shoot at the sky, because I like to do something. I wanted to do something. So, going into scalping was something that I was going to eventually do if I went into trading. So so that's basically it.
Interesting. That's an interesting final point. Brilliant. All right. Well, listen, thanks for that, Ian. So next week, as I said, is podcast number 20, and we'll be talking about indicators. All right, what, if any, use they have to you. So if you've got any points or comments on it, by all means, feel free to get in touch. You should be able to. There should be some links here on the channels. And finally, as always, listen. Thanks to all of you who subscribe, who like, who comment, send us feedback and stuff. We love it all. Really appreciate it all. It's great. And long may it continue. And so until next time, I hope you have a fabulous trading week, everybody. And we'll speak to you soon. Cheers, Ian. Cheers, everybody. Thank you.
Bye. Bye.